So in yesterday's session, we have covered one second. So we have covered the definition part and the assignment part, correct? And we have started company code global parameters. So we left with profit center definition and assignment of profit center to company codes, right? If I'm not wrong. Correct. So again, to that, what is the prerequisites to define a profit center? What are the prerequisites to define profit center?
Controlling area.
So when we can do the controlling area?
Once the global parameter settings are given.
So in global parameters, the first step is chart of accounts. So we discussed how many types of chart of accounts we have. How many types of chart of accounts we have? How many types?
Three types.
Three types. What are they?
Operational.
Correct. Country specific.
Operating chart of accounts, country specific chart of accounts, group chart of accounts.
Group chart of accounts. You know that, right? So normally, what are the different methodologies we have?
1:1 and 1:n.
Yes, we were doing
1:n.
1:n methodology and 1:1 methodology. So what is the difference between 1:n methodology and 1:1 methodology?
Cost company code postings can be
possible, right?
In 1:1.
So yeah, group chart of accounts is nothing but a 1:1 methodology. Operating chart of account is nothing but 1:n methodology. So when we are following 1:n methodology, cross company code costing and cross company code intercompany transactions are possible in 1:n methodology. Okay, when it comes to 1:1 methodology, the cross company code is not possible, right? So first step, the first step, chart of accounts. We discussed chart of accounts. So first we need to create chart of accounts. So before that, write down company code global parameters, right? Write down edit chart of accounts. Chart of accounts, put a heading as in chart of accounts. We need to configure. Four steps. 4 steps in chart of accounts. First one, edit the chart of accounts list. Edit chart of accounts list. Assign company code to chart of accounts. Assign company code to chart of accounts. Next one. Define account group. Define account group. Define account groups, and last but not least, define retained earnings account. So each step, so we are going to discuss in depth. So write down first one. So we have already done this. These steps, definition of a company and all. And one more thing before we start, I'll tell you once this is done. Yeah. So write down the path. Definition of chart of accounts. Definition of chart of accounts. Write down the path. SPRO. SPRO. SAP reference IMG. SAP reference IMG. Financial accounting new. Financial accounting new. General ledger accounting new. General ledger accounting new. Master data. Master data. GL accounts. Next, preparations. Edit chart of accounts list. Edit chart of accounts list. Transaction code OB13. Transaction code OB13. I'll show in the system also. Path again. SPRO. Transaction code. Okay. Sorry. 1 second. It's very slow. I don't know why. Let me log in again. SPRO. SAP reference IMG. SPRO. SAP reference IMG. Financial accounting new. Financial accounting new. Financial accounting new. So here, general ledger accounting new. General ledger accounting new. Right? So here we are going to create master data. GL accounts. Preparations. Edit chart of accounts list. So you know how to activate transaction codes. See here. Edit chart of accounts list. Transaction code OB13. Okay. OB13 or OB13. OB13 is the transaction code. So edit chart of accounts list activity. And here write down press new entries. Press new entries. Okay. LOCA. LOCA. Okay. So here I'll create it as a Lahari. Operational chart of accounts. So here you can see the transaction code also here. Lahari chart of accounts. Okay, language English. So length of JL account, maximum how many numbers we can give? How many digits we can give?
10, I guess.
10, right? So, but here I'm taking 6. In real time, maybe you will have 7 or 8. Okay, so here. Group chart of accounts. When we are going to select this? When we are going to select group chart of accounts?
When we have more than one operating chart of.
Means if we are going 1:1 methodology, then we are going to create group chart of accounts. Right? But here we are following 1:n methodology. So we will leave this as in blank. We will leave this as in blank. Any questions here? Right? So whenever you are doing this methodology, 1:1 methodology. Okay. So here you need to create LGCA is my group chart of accounts. Clear? So I need to create LGCA. Then next I need to select it. And for example, if you want to block this, then you can select it. Okay, again, I'll show you in future how to create group chart of accounts and as well as country specific chart of account. As of now, just follow this one 1:n methodology. And next scenarios, I'll show you 1:1 methodologies also. How to create a group chart of accounts and country specific. Clear? Any questions here? Yeah, so write it down here as it is. What is our request? So we need to select one request. First, I'll save it. The next, you can write. So just write it down. So digits normally in real time, what I saw is 7 to 8 digits they will get. But here I'm taking 6. But in your practice, you can take anything. Once you are done, let me know. Okay. So here there is one, is there manual creation? Is it done, everyone? Is it completed to write? Am I audible? Hello. Hello.
Yes, sir.
Kindly respond because I'm not sure whether you are able to hear me or not.
Yeah, you can hear.
Thank you.
Done.
So here there is an option called manual creation of cost elements. If you click here, automatic creation of cost element. What is the difference? I'll explain here. Okay. Okay. So we have two different modules, right? We have two different modules. One is FI module and next one, sorry. Okay. So we have same thing, whatever I have seen. You can see here in FI, we call it as an GL accounts. And in CO, we call it as an elements. Okay. In CO, we call the same GL accounts as an elements. We won't call in CO as a GL accounts, we'll call it as an elements. Okay. And in FI module, we have a liabilities, assets, incomes, and expenses. Correct? In FI, financial accounting, we have liabilities, assets, incomes, and expenses. When it comes to controlling module, that is nothing but your cost and management accounting. It's nothing but a cost and management. In cost and management accounting, we are not going to deal with any liabilities and assets. Any liabilities and assets. We are going to deal with only profit and loss account. Right? So that is nothing but, see here, you can see I have mentioned liabilities. So here it is no elements. We don't have any elements called liabilities in CO module. That is nothing but in controlling module. And we don't have any elements related to assets in CO module. We don't have. But in FI module, we call it as an incomes. Okay. But in CO module, we are not going to call it as an income. We are going to call it as an revenue elements. Revenue elements in CO module. But in FI module, we are going to call it as a revenue elements. But when it comes to expenses in FI module, we are going to call it as a cost elements. So in FI module, we have assets, liabilities, incomes, clear, and expenses. But in CO module, we don't have elements called liabilities. We don't have elements called assets, but we call incomes as in revenue elements and expenses as in cost elements. So controlling module deals with your costing only, no assets and no liabilities. Any questions here? So just write it down. So CO module doesn't talk about your assets and liabilities. It talks about only revenue and cost. Just write it down and let me know any questions. Okay, any questions here? Yes, no, kindly respond, please.
No, sir.
No, sir.
Okay.
No questions.
Okay. So here what I want to say is, see, FI module, we will create the GL accounts. Okay. Okay, what in GL account, in FI module, we will create income and expenses. Okay, income and expenses, and these will be converted to revenue and cost elements in CO module. Cost and revenue elements in CO module. If I say manual creation of cost elements, in the sense, what does it mean? So whatever incomes and expenses we are creating in FI module, that will not be converted revenue and cost elements in CO module. Here, when we select manual creation of cost elements, clear? So whatever GL accounts of related to expense and incomes, we will create an FI module, and we are selecting manual creation. Then this particular GL account flows will not flow from FI module to CO module. Clear? And we have one more. We have one more. Automatic creation of cost elements. Okay, then what does it mean? So whatever GLs we are going to create, incomes and expenses will be moved and considered as an revenue and cost elements. Clear? Any questions in this? Set. So when I select here automatic, so here when I said income GLs, then automatically it will create as an revenue elements. And here expenses, it will be considered as an cost elements. Clear? Any questions here?
Naveen, one doubt.
Please.
Naveen, this ECC we are having this option, but in S4 HANA, I think in FS00 only we can create.
I'll show you separately. I'll show you that this one is for HANA.
Okay.
Okay, because we have that particular topics. Why I don't want to merge right now, in the sense, majority people doesn't have this particular ECC version, this thing. So if I combine this, then 100% will have a confusion. Hope you understand.
Okay, Naveen. Sorry.
Yeah. Okay, initially we will base ECC part, we will do it. The next I'll club it S4HANA part. Okay, as I said that in S4HANA, we don't have a separate modules called FI and CO. Both are merged. We are going to call it as in simple finance. But in ECC version, we both are separate modules. Clear? Any questions?
Yes.
Yeah.
Yes.
So as of now, so normally what happens is FI consultant would be someone different and CO consultant would be nearly in real time. What happens is FI consultant will work separately and CO consultant will work separately. So first FI consultant will do this as a manual creation of cost elements, and whatever elements are there for revenue and cost, that will be created by CO consultant, right? Controlling consultant. So that's the reason we are selecting here it as a manual creation of cost elements. Just write it down this. So initially we are going to select it as a manual creation of cost elements, and again 100% we have a topic called S4HANA topics. So at that particular point of time, I'll show you the difference between S4HANA and as well as an ECC version. Okay. Any questions? Any questions, everyone? I'm requesting everyone, if you don't have any questions, because I don't know whether you people are writing or only listening. That's the reason I'm expecting a reply from you.
No, sir. No, sir.
That's it. Okay, is this clear? Any questions here? Yes, no.
No.
So here you can click on save button. Click on save button. So we are done with step number 1. So what is our chart of account here? LOCA. So what is done? Give me 2 seconds of time.
So when the session is idle for 5 minutes, it gets logged
Sorry?
automatically, right?
I didn't get you.
When the session is idle for 5 minutes, it gets logged off automatically. Can we
No,
increase the
it's
duration?
not here in my case. Here it's a network issue, that's it.
Okay.
Yeah, it's great. Okay, it got saved. So write down next, second step. So first step we have done. So whatever chart of accounts we have created, that need to be assigned to company codes, 3 company codes. So 1:n methodology we are following, right? So write down, assign company code to chart of accounts. Path same as above. Path same as above. Till preparations. Till preparations. Till preparations. And from there select assign company code to chart of accounts. Assign company code to chart of accounts. Transaction code OB62. Transaction code OB62. Okay, I'll show you in the path also. So we have done the save. Okay, so this one, assign company code to chart of accounts. OB62, 62, sorry. Assign company code to chart of accounts. So click on here. So click on position button. Next, click on position button. OB62 transaction code. Click on position button. Give your company code. What is our company code? First company code.
LI01.
LI01.
01. Perfect. So LI01. Click on position button and give company code. So here you can see LI01. This is ours. So here, right, we have two columns here. Right, we have seen two columns. One is the first column is nothing but your operational chart of accounts, and another one is country specific chart of accounts. Okay. Right. And so now anyways, we are not using country. We have only chart of accounts column. Press F4 in chart of accounts column. Select your operational chart of accounts. LOCA. So country specific, we will see later. Just write it down. So we have created operational chart of accounts and we have assigned in this step two company codes. So just write it down. So all the three company codes, because we are following 1:n methodology. Any questions still here?
No, sir.
So click on save button. Click on save. So click on OK. So what are the steps we have done? We have created chart of accounts. We have assigned chart of accounts to company code, right? In that also we need to discuss in future group chart of account and country specific. Next step, define account groups. Third step, define account groups. Path, same as above. Path, same as above. Till preparations. And from there select. Define account group. Transaction code OBD4. Okay. OBD4. Okay. OBD4. This is very important. Normally in other institute or whatever you will, they will create only 4 account groups: liabilities, assets, next one incomes and expenses, right? So but here we are going to do in depth each and every account, whatever important ledger account in real time we are going to create. We are going to get all those, we will see here. So here OBD4 is the transaction code. Define account group OBD4. So here, so what is, so press new entries. So here you need to give LOCA. Okay, LOCA. Okay, I'll create it as an, anything you can take account group. I'm creating it as an L100. Okay, it's not mandatory, you need to take the same. So share capital account. I'm creating each ledger account groups. So I'm giving 10,000 range here. Okay, 1 lakh. 6 digits we have taken, right? So here 109999. Next one, LOCA. Next one, L110. Reserves and surplus. surplus 1,10,000 to 1,99,000. Next one, LOCA L120, accumulated depreciation.
So what does reserve and surplus means?
I'll explain. It's an accounting terminology. I'll explain what are the different types of reserves now itself once we are done with this. Is that fine?
Okay, sir.
Accumulated depreciation 1,20,000. So I'm giving the GL number ranges. These are okay. 1,299. Next one, LOCA L130. So L represents it's a liabilities. So I'm giving all the liability ranges in one series. 1 lakh to 1,99,000, something like that. Okay. So here 1,30,000. 1,30,000. I'll give it as in secured loans. Secured loans 1,30,000 to 1,399,99. LOCA L140. Unsecured loans 1,40,000. LOCA L150. Paid payables 1,50,000. 1,50,999. LOCA L160. Tax payables LOCA L170. Current liabilities provisions okay. Next, assets LOCA A200. Fixed assets 2 lakhs. Or you can create it as in next one, LOCA A210. Investments A220. loans and advances. This is the only challenging thing we will have in this particular time. A220. $230.
Investment is
Investments. Oh,
already you have given from
Yeah,
2
yeah.
lakh on.
sorry. I'll make this as an inventories. Thank you. Trade receivables, nothing but Sunday debtors. So I'll start with here. Miscellaneous expenses. Now assets we are done, liabilities we are done. Now I'll do revenues. Incomes. So I'll start with 300. Sales revenues. Three lakhs. Just write it down till here. Next, I'll continue. Or just write it down till here. So once you're done, let me know so that we can have next set of accounts. The last I'll complete my incomes, and the next I330 increase or decrease in stocks. 3,30,000 and 330. Just write it down. Once you're done, let me know, please. Is it done, everyone?
Done.
Okay. So till here we have done with the incomes. Now we will see expenses. Hello, CA. So expenses will represent with E 400. Raw material consumption. E410. Personal expenses 410, 410.99. Okay, I'm going up. Next one. LOCA E420. Manufacturing expenses 4,20,000. 429999. 429999. Okay, next one. LOCA E430. Administration expenses or administrative expenses. Do you need to remember this? Not required, but your account groups will be given by your client itself. Clear? In real time. Whatever I came across in my throughout experience, just according to that, I'm building up. So maximum we will get this general account groups. I'm creating it. Just write it down. Let me know once you're done. Once you're done, let me know, please.
Done.
Okay. So let's go to the last step. Click on save. So one account we need to reserve for retained earnings. What do you mean by retaining earnings? Retaining earnings are nothing but, I'll come and I'll explain each and every account nature. Okay, when we do our core accounting part, meanwhile, just write it down. Okay, retained earnings account in the sense undistributed profit. In general, we'll call it as an undistributed profit. So nothing but retaining the earnings. Retaining the earnings. What does it mean? See, whatever profit we are going to get as a company, clear? So we want to distribute everything to shareholders or the owners of the business or company, right? Some part of the amount we are retained for future expansion purpose or any other unexpected things may happen in the business. To mitigate that, we will keep some amount aside from the total profits. Clear? So that particular amount we are going to call it as a retained earnings. Retaining the earnings means who are going to retain? The company will retain the earnings, some part of the amount, and the remaining part will be distributed. Out of for 100%, 30% may retain and the 70% will be distributed. So there are two types of profits: distributed profit and undistributed profit. Undistributed profit, we are going to call it as a retained earnings. And this retained earnings are considered as a liability to the business. Considered as a liability to the business. Clear? Why? Because at the end, if you want to get any sort, we didn't use this retained earnings. That 30% amount we have not utilized for any purpose. Then at the end, our duty, our job as a business, we need to repay back to owner that amount. So something which we need to repay back is considered as a liability. Something which we need to repay back to someone, then that is considered as a liability. So the retained earnings would be considered as a liability. Clear? So next step, write up. Define retained accounts. So path, same as above. Path, same as above. Same as above. Till preparations. Till preparations. From there, select retained earnings account. From there, select retained earnings account. Okay. And every firm, every company has to maintain this retained earnings account. Mandatory that is. Transaction code OB53. 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 So we will save this. So understood, right? What do you mean by retained earnings, everyone? Yes, no? Hello?
So once again, can you repeat?
Yeah, I'll definitely. See here. What do you mean by capital? Any idea? What do you mean by a capital? Anyone?
The money which we put into business.
We in the sense? We in the sense?
Some invested by the owner,
Investment
done by the owner
done by the
to the
owner.
business.
Perfect. Whatever amount invested by the owner. In what the owner will invest? In
Business.
business. Correct? So here, Naveen started business with cash, for example, 1 lakh. So how many persons are involved in this particular transactions? How many persons are involved in this particular transactions?
2%.
2 persons. Who are they?
Naveen and business.
See here. Naveen is one person, natural person,
business,
and business
artificial
is
person, business,
artificial person. And who is business here? Who is business here? See, the thumb rule. Hope everybody knows, but still I am reiterating. The thumb rule of accounts. Thumb rule, remember this. Thumb rule of accounts is, okay, whenever we are doing business, we need to consider entity concept. We call it as an entity concept. What is entity concept says is, okay, owner is a different person and a business is a different person. And whenever we are doing accounts, we need to consider ourselves as business, not as owner. Not as owner. Owner is separate from the business. Is this clear, everyone? See, whenever we are doing accounts, we need to consider ourselves as a business. So here I said Naveen started business with cash 1 lakh, right? So here Naveen, I need to consider myself as a business, not Naveen. Naveen is a separate person as per entity concept. Clear? It's a mandatory, because again, one more thumb rule, whenever we are doing accounts, we will do accounts in business point of view. Always we will do accounts in business point of view, not owner point of view. We never combine owner expenses and business expenses. We never ever combine owner expenses and business expenses. Owner expenses we will take separately, but business expense we will take separately. Clear? If we combine both owner expenses and business expenses, owner incomes and business incomes, then definitely you are not going to get any sort of accurate output. So first thumb rule, entity concept say that owner is different from business. Whenever you are doing accounts, you need to do accounts in business point of view, not owner point of view. And one more thumb rule, whenever we are doing accounts or business, we need to consider ourselves as a business, not the owner. And what owner is doing here, Naveen is giving me a cash of worth rupees 10,000 as an investment. So with this investment, what I can do, I can buy any goods or services, and after that I can sell it. To do my day-to-day operations, Naveen is giving back. Naveen is giving how much amount to me? How much amount to me? Hello?
1 lakh.
1 lakh. So what is my prime responsibility? So this is considered as a capital for me. For me in the sense whom? Naveen or a business? Capital is it considered as a capital for Naveen or business? Please kindly respond.
For the
For
business.
business.
Sorry, it's not for the owner. Okay, Naveen is investing, and that will become a capital to the business. For me, it is a capital. We need to consider ourselves as a business, and that is considered as a capital to me, right? So with that, I can do my business activities. So here, who is giving me the amount? Who is giving me the amount? Quick. Who is giving? Who is investing?
Business.
Who is investing? Naveen is investing. And who is business here? We need to consider ourselves as a business. So how much amount he is giving us? 1 lakh. So whatever amount he is investing in us, he is giving to us. Sorry? Someone was asking some questions. Okay. So what is our prime responsibility? Whatever amount Naveen has given to us, our main job is to repay back that amount to Naveen. Whatever 1 lakh amount he is giving to us with profit or whatever loss, whatever it is, we need to repay back to whom again?
Naveen.
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 Something which we need to repay back, then it is considered as a liability. So that's the reason capital is considered as a liability to the business. Liability to the business. So first thumb rule, you need to remember that owner is different from business. We need to consider ourselves as a business, and we always do the accounts in business point of view, not owner point of view. And whatever amount owner is giving to us, okay, we need to repay back to owner at the end. So something which we need to repay back, then that is considered as a liability. Okay. So here we have started business with 1 lakh. So at the year end, we got 1 lakh, total business got 1,40,000 rupees is with the business. So what is the profit in this? What is the profit?
40,000.
40,000, perfect. So 40,000 is the profit. To whom it we need to give it back?
To Naveen.
To Naveen. So what we are doing is, out of this 40,000, we want to give complete amount to Naveen. So what we are going to do, we are going to pay him 30,000. We are going to give him 30,000 and we will keep 10,000 aside. We are going to keep that 10,000 with us only, business only. Why? In the sense, in near future, we may get some sort of losses, right? Or we need to expand the business, right? For that, again, we can't ask Naveen. We won't ask Naveen. So with this 10,000 only, we will utilize. So whatever amount we are keeping with us in the sense business, with the business, that amount, that whatever amount we are retaining, that is from the earnings, then that amount we are going to call in SAP as retained earnings. Is this clear? Now, any questions?
No.
Yes, no.
No, sir.
Sorry?
No.
Clear, right? Everyone, how about others?
After distributing the profit, whatever it is left, it is called retained earnings.
Correct, correct. Okay, sometimes we call it as a reserve also. Okay, after keeping reserves, whatever we will keep some amount aside, then that is also considered. I'll explain each and every step. What do you mean by reserves? What is provisions? What is retained earnings? But just keep it in mind. Retained earnings are nothing but the terminology, retained earnings. So whatever earnings we are getting, we are keeping aside. We are not distributing. Undistributed profit is considered as a retained earnings. Clear? Anyone have a questions? Anyone have a questions in this? Shravani, any questions?
No, Naveen is
Yeah.
clear.
Zubair, how about you? Yes, no. Raj?
Yes, sir.
Any questions? Muthu?
Can you just
No,
tell
sir.
definition, sir? We will write
Sorry?
it. Definition.
I didn't get it. Definition? You want me to give the definition?
Yes, sir. Yes, I will note it.
Yeah. Retained earnings. The undistributed profit. The undistributed profit which is retained or which is retained by the business is known as retained earnings. And retained earnings are considered as liability to the business. You know now why we are considering it as a capital is a liability, right? And retained earnings are a liability, right? Next. Hope it's clear. If not, again, we will do the basic accounting concepts. No issues. Okay. So have we done this? So path, same as above. Till preparations. From there, select define retained earnings account. Transaction code OB53. OB53. So it will ask first when we say defined account group, define retained earnings. OB53 is the transaction code. It's again done. It's not a problem. Let me wait for 2 minutes. Okay, we need to give chart of accounts, retained earnings. Okay, for example, what is my chart of accounts? What is my chart of accounts?
LOCA.
Sorry, LOCA, correct? Lahari operational chart of accounts. So click here. Okay. So here, what is my profit and loss in the sense? Say normally, what would be your profit in this year? We are now in April 1st, right? And we have started a configuration. What would be your profit on 31st March 2024? What would be my profit? Yeah. Can we say now? Is it possible to say?
No, sir.
No.
No.
So something which we don't know, what we call? We will assume, nothing but let's feel as an X. So here that is also P&L account statement. We will consider it as an X. Any character you can take, but majority in real time also 99.9% P&L account statement X we will take. Okay, and here any account we can take. Liability series, we remember right? So reserves, we have taken 1 lakh to 1,99,000, something like that. So here we can create, and after that reserves, sorry, share capital, we have created 1 lakh to 1,99,000, and reserves and surplus, we have created 1,10,000 to 1,10,000,1999, correct? So this retained earnings is related to reserves. The retained earnings is related to reserves. So we need to reserve one particular account in reserves and surplus account. So ledger account, what I am taking, 1,10,000. So here automatically this particular account will go to, here you can see LOCA, Lahari operational chart of accounts. Balance will be carry forward, means whatever P&L account you will get a profit. In that we are going to define in future how much profit need to be go to retained earnings account. How much profit need to go to retained earnings account. Clear? So that much profit will go to this particular ledger account automatically. Clear, everyone? Any questions? Any questions here?
No, sir.
So just what we are doing here, just we are reserving, you know that, right? Whatever account groups we are created, in that one particular ledger account, we are reserving for retained earnings account. Fine. Any questions for anyone? Anything you can give here, 1,10,000 to 10,999. X is a reserved keyword here. Okay, so click on save button. Okay, so once if you save, then it will show you one warning message, soft warning message, because we have not created ledger. But without creating ledger before only we are reserving this. So here, save. So here you can see here, account 1,10,000 not created in chart of accounts. We have not created yet. We have only defined account groups, but ledgers are not created. So that's the reason it is showing that it is ignorable. Write down this warning message also. Just write down this.
Sir, I have seen some people creating.
Sorry?
Like, I have seen some people creating X, again they are creating Y, again they are creating Z, like multiple times Y they are creating.
I didn't get you.
You have created X, no sir, X.
Yes.
Below, some people are creating again Y.
So see, this particular company code is related to you only, right? Right. So whatever changes you want to do, only you will do it. Right? There is no limit. You can create your retained earnings account, not only X, Y, Z, A, B, C, D also. Not an issue. But at the time of configuration, what percentage of amount need to be transferred from your P&L account to retained earnings account? For which reserve key you want to transfer? Only that much. For which account? See here, X keyword. What is the GL account we are giving? We are reserving it. 1,10,000. So if you are trying to give Y the same account number, it won't accept because it is reserved for X. Right? You need to give, what is our series here? Account group 1,10,000 to 1,19,999. Correct? The reserves in surplus. So he has given 1,00,100. Right? For Y. So at the time of configuration, we will mention how much percentage of the profit need to transfer for X for this particular ledger account and Y this particular ledger account. In that way, if you create any number but you are not configuring this in future, then only this much, this will be activated and remaining will be suspended.
Okay.
Clear?
Yes, sir.
If I've answered your question.
Yes, sir.
Any other questions? See, again, don't worry if someone is going like above. We will have a accounting sessions once before we start the GL module part. I'll cover everything. What is account, what is debit or what is credit and everything. Before I'll start the GL module.
Okay.
Okay. Just write it down. So next one, click on save button. So we have done all the chart of accounts. We have done all the three categories. We have created chart of accounts. We have assigned to company codes. We have created account groups and we have created what we call retained earnings account also. Okay, press enter. So now press enter. Do you want to save this data? Yes. So what is the transport request? There's the transport request. Okay, next step, fiscal year variant. Write down, this is very important. Fiscal year variant. Define fiscal year variant. Define fiscal year variant. Okay. So first I'll explain the literature part. So we have done here. Account groups also. So here, so this particular part is done, completed now. Charted of company code global parameters, first step is finished. So this is next to global parameters. Okay. Most of the interview questions will be covered from this only, global parameters only. So one is in chart of accounts, another one is in fiscal variant. So what do you mean by a fiscal year? What do you mean by fiscal year? So, sorry?
Financial year.
Exactly. Financial year.
Financial year.
Exactly. In SAP, we call it as a, right? A fiscal year means accounting year or a financial year. Right? So how we are going to follow here, you can write down this. Fiscal year, write it down. Fiscal year means financial year. Fiscal year means financial year or accounting year. Different countries follow their financial years differently. You can see here. In India, financial year, in SAP, we call it as a fiscal year. So from when to when we will follow? April to March. 1st April to 31st March. And in US, majority, not all in all states will follow Jan to December, but majority states will follow. In US, fiscal year or financial year, 1st Jan to 31st December. We call it as a calendar year. And in Indian fiscal year is a non-calendar year. Australia, in Australia, 1st July to 30th June. So is it a calendar year or non-calendar year? Yes. Non-calendar year. And when it comes to Europe, 1st October to 30th September. This is also known as a non-calendar year. Okay. Any questions here? Okay. So here in India, for example, our year starts with fiscal year, normally financial year, or SAP, we call it as a fiscal year. So here our first, what is the current fiscal year? 1st April 2023 to 31st March 2024. So what is our financial year now? We call it as an 2023-2024. Correct?
Yes, sir.
2023-2024. or 23, 24. But in SAP, how we are going to call it as in, we call this is called financial year in general, 23, 24. But in SAP, how we are going to call it as in fiscal year, right? As what is a fiscal year? We won't call 2023, 24. Right? How many, which year months are more? In which year months are more?
23.
So here we call fiscal year as in 2023. Which fiscal year we are in? 2023 fiscal year. Why? Because 9 months from 2023 and 3 months from 2024. So most of the months or periods exist in 2023. And less periods or less months exist in 2024. So that's the reason we call current fiscal year as a 2023 fiscal year. Clear? Any questions here?
Sir, now for Europe, you have given 1st October to 30th September. In
Correct.
that case, fiscal year will be 2024.
22. Clear?
2020.
See, that's what I'm saying. How they maintained in the books from the starting. Right? How they maintained the books according to which fiscal year. So first time they have started. For example, this particular year they have started. 1st October 2022, they have started. And their September 2023, they are going to close the books. Correct? Then their physical year will be in general 2023. Is that clear? Yeah. October, November, December. Only 3 months are there in October 2022. Majority are falling in 2023.
Okay.
So that would become, means their year start, financial year start. 2023 will start in 2022 only.
Okay.
Clear? Any questions? Any questions?
No, sir.
So how this year start in the sense? So in SAP, we have a fiscal year. Okay, I'll explain this. So fiscal year. Fiscal year. So here, fiscal year starts with first month, that is nothing but your April, and ends at 31st March. 12 months or 12 periods. We call it as in SAP, we call months as in periods. Clear? 1st April, which period is it? Which period?
One.
First period. Right? May.
Second.
Right? First period is in April. Second period is in May. Third period is in June. And March?
Third.
Sorry?
Third.
Correct. So here, we have 2 periods here. Normally, one is we call it as a normal periods. And special periods. So here, normally SAP provides normally 12 months in a year. Okay. So we have started our books of accounts on 1st April and we will close it on 31st March. So we have done all the transactions. Okay. The next, what we will do once we close our books of accounts, then we will hand it over to these books to auditors. Clear? We will hand it over to whom? These books to auditors to check. We need to pay our taxes and everything. after closing of our books of accounts to the government, to legal authorities and all, whatever amounts we need to pay. So what auditor will do is, if your volumes, if your transactions are less, then probably they may do audit within a month. If your account, your transactions are medium, then probably it will take 2 to 3 months time. But your transactions are very much more, then it may take 4 months. Clear? So what they will do, auditor will check the transactions. For example, after March, okay, they will start audit on April, audit in the month of April, for example. Okay, and they found some entries which we have not recorded in our books of accounts. Which period they have checked? Which month they have found? Which month they found?
In the month of April.
In the month of April. Clear? So it is after completion of a financial year, correct? Our financial year is going to close on 31st March 2024. But on April 2024, they found some entries are missing in our books of accounts. Correct? So we need to adjust that. We need to adjust those entries. Okay. So to adjust those entries, we can have special periods. There is a concept called special periods in SAP. So minimum 1 special period and maximum 4 special periods we can have in SAP. So according to your transaction volume, you can have 1 special period, or you can have 2 special periods, or you can have 3 special periods. But maximum, how many we can have special periods? How many?
4.
4. So here, that special periods, we call it as an 1 to 12 normal periods, and to adjustment whatever we have given, that we call it as a special period. How many we can have? 13th period, 16th period. So whatever transactions which we missed and which auditor found in the month of April, correct? That entry is called adjustment entries, and that will be posted. April 2024 is considered as a 13th period. Okay, for fiscal year 2023. Okay, my fiscal year is 2023, but in April 2024, they found the entries are missing. Or, okay, then that is considered, the postings will be done in 13th period. Those are nothing but 13th period is nothing but adjustment entries. Next, few more entries they found and wrong entries. We have entered in the invoice is showing. Invoice is showing 10,000 amount or 1 lakh amount. Invoice is showing 1 lakh, but we have entered 10,000 in our voucher entries, posting part. Right? Then when they are checking in the month of May, they found that the entry was incorrect. So which period we need to do the reversal and corrections now? Can we do first to 12 periods? Is it possible to do 1 to 12 periods, normal periods? Hello? Are you able to understand or not? I'm not getting answers from you. Am I audible?
Yes, Navin, it's audible. We cannot do corrections for the 12 months.
Correct. We can't do adjustments, right? We can't do any because the books are closed here. So we found in the month of May, that is nothing but 14th period, right? We need to do the reversal and corrections in 14th period, right? So whatever adjustments, whatever missing entries, whatever reversals and corrections after books closed, then that will be performed in your special periods, right? That is called adjustment entries. After this only we will prepare, our financial reports. Whatever your trading, profit and loss account, balance sheets, cash flows, funds flows, and everything, after closing your special periods, then only we will prepare our financial statements. So any questions still here?
No, sir.
right? So normal period and special period. So here this is, and when it comes to US, they will have their year starts with 1st January 2022. Their fiscal year starts, physical or calendar year start. So 2023 to 31st December 2023. Okay. So normal periods. So if I take normal periods, and special periods. Okay. So here, what would be my fiscal year here? What is my fiscal year?
2023.
23. Right. Here, how many normal periods we have?
9.
9.
And sorry, 12 normal.
Right. 1 to 12. Okay. And how many special periods maximum? Minimum
4.
is 3rd.
1.
1 and maximum are
4.
here. And so both are for 2023 only. So special periods, nothing but for audit adjustments. So most of the people, you are aware of it. Majority people are working as a end users at least. Clear? Any questions on this? I know it's a huge
No, sir.
topic. Any confusion here? Let me know if
No,
I have
sir.
one. Yeah. So here, and SAP provided, okay, variant, physical year variant, standard physical year variants. Okay. SAP has created some standard physical year variants. For example, SAP. So we need not to create again. We can follow the same thing. Attributes, variant, I said. So here, I'll tell you standard SAP variants. So these are SAP already provided. Okay, one is V3, April.
For every country they provide, sir, by default.
Sorry?
For every country they will be providing fiscal year variant by
Yes.
default.
For every country. Okay, 4 special periods. So April to March, V3 is nothing but Indian. Next one, V6. July to June. Plus 4 special periods. Next one. V9. October to September. Plus 4 special periods. Next one. K4. Jan to 4 special periods. Okay. So I'm giving this example, few examples. So our company, Lahari company, which fiscal year we need to follow? Which fiscal year we need to follow?
For India, V3.
V3, perfect. So here, what we are going to do here is, we are going to copy this variant. Okay. So we are going to create our own variant. We are not going to create we are copy and we will rename it. So I'll create it as an LV variant. LV variant. I'm giving instead of V3, I want to rename it as an LV, or you can use it the same name with the same name. So for recognition purpose, I'm creating L stands for Lahari, V stands for V3. Okay. So here for I'm going to use for my all company codes LI01, LI02, and LU01. Okay. When we come to new GL account, new GL accounting, we need to these two companies are in India and this company is in US. So when we will come to new GL accounting, we are going to copy this Jan to December also for this company code LU01. Right now, we are going to do only with the V3 part. But when we are going to start our new GL accounting, we are going to copy K4 also for only for this particular company code. Is this clear? Okay, just write it down this. So what we are going to do, V3 variant, we are standard variant, we are copying instead of creating, because in general, whatever SAP is providing, we can use that. It will work perfectly. In real time also 99.9%. Okay. Any questions here? Any questions here? Yes, no?
No, Naveen.
Yeah. So here, how SAP understand the calendar here? How SAP is going to understand the calendar? For example, if I take V3, we are doing V3, right? V3, April to March plus 4 special periods. So try to understand this for today. Okay. I'll take here as a month, or else what I'll do. Month end date. Month end date. Period. Year shift. Month end date. Let me first complete period and year shift. So what is my year, fiscal year? What is my fiscal year here? April to March?
Yes, sir.
What is my fiscal year?
2023.
2023. So here, my base year, fiscal year is 2023. Now we are in 1st April 2023, for example. So here, first one. When it will start? Month. So I'll have something. Month. End date. Periods. Okay. So here, my year starts with, first year starts with 04/2023. What is the end date of April? What is the end date of April? What is the end date? 30th, right?
30th.
30th. And what would be the period? Which period we are in?
First.
First period. So here we are in which year?
2023.
23. And what is our financial year? Financial year
2001.
minus the year. Then year shift will be 2023 minus 2023. So 0. Okay. So next month. 05, that is nothing but May month 2023. Right? So what would be the May month date? End date 31, if I'm not wrong. 31. So what is the period here? Second. So we are in the same year minus year. So we are 0 year shift. So year shift is nothing but year changing, because here see how many years it will come. See, till December we will have 2023. From January the year will change to 2023 to 2024. Correct?
Yes.
So, but fiscal year is 2023 only. But how system will understand? SAP will understand in the sense this particular configuration already we need to do it. So here 06 2023. So June month. Sorry. June month 30 days. Third period. Okay. 0 fiscal year. Again, July month 2023. So July 31. Fourth period. 0. Next one, August 2023. 31 days. Fifth period. And same time 0. Next one, September 2023. 30 days. 6th month. And year is 0. Next one, October 2023. 31 days. 7th month, 7th period. 0. November 2023. 30 days. 8th period. Next one, 0. December. So till here, do we have any problem? Any problem here? Till here? Yes, no? Hello?
No, no.
No, right? So here system won't understand. So here it will start 01. So 2024. So here, okay, no problem. 31, fine, no problem. 10th month is also not an issue. 10th month is also not an issue. So here 2023 minus 2024. What would be a result? 2023. Is it 1 or a minus 1?
-1.
Minus 1 means year, fiscal year minus year. Then we are going to define it as a -1. How system will understand? Okay, when you are posting an entries in the month of January 2024, whenever you are posting entries in January 2024, how system will check in the sense, okay, the fiscal year is 2023, right? But we are posting in 2024. So 2023 minus 2024, then it is nothing but -1. So -1 in the sense 2024 minus 1. What would be the year? 2024 minus 1. What would be the year?
2023.
2023.
20.
Okay. Already 2023, 9 months are completed. Now we are in which month? Which
10th.
which period? Sorry.
10th period.
10th period. Right? In the same way, February. So system we are making system to understand, even though we are in different year, but the system need to understand with this year shift concept. So here, how it will check? So again, 2023 minus 2024. 0 or minus
-1.
minus 1. Right? And the period is?
11th period.
Sorry?
11th period.
11th period. Sorry, just let me take here. Okay. Next one, March. March month, 03, 2024. So March month, 31, 12, minus 1. Clear? Any questions?
No, Naveen.
Okay. So this is the physical year concept. How the system will understand when, if the calendar years, if Jan to December, then there is no problem of year shift, correct? No need of year shift. But here, if it is not equal to calendar year, then we need to do the year shift concept. But SAP has already done in V3 this year shift concept. So we need not to do. But if you want to create your own variant, then we need to do this all stuff. Clear? Any questions here? Any questions?
No, Naveen.
So here also, for example, if I take special periods. So special periods, here it will be taken as in 04, 20, 24, special periods. So here the fiscal year is considered as in 2023 only, 2023 only. So here end date would be 30th. Okay. Period, 13th period. So year shift 0. Because it's considered as an, whenever I say 13th period, it will consider at an 0 only. Next one, same 05, 05, 2024, 31, 14th period of 2023. So year shift will be 0. 0. Next one. Zero 06, 2024, 30, 15, 0. Next one, 07, 31, 16, 0. Special period. Clear? Any questions here? Still here, any questions? Yeah, anyone have a questions here?
No, sir.
Okay. So this is the way normally we will configure, but instead of configure, what we can do is we can copy Okay, these are attributes. See, these are the things we need to do. If you are doing manually, we need to first define years, we need to define days, we need to define periods, we need to do if year shift. So already SAP has provided everything, as SAP has done these things. So why again we need to do as a consultant? What we can do is we can copy that standard variant and we can give our name for that variant. That's it. So instead of doing these many steps. Yes or no?
Yes.
Okay. So here we are going to create our own physical year variant called L. L stands for Lahari. V stands for V3. Okay. Or else you can write this also. Same thing, whatever I said. Okay. So here we are going to call it as an, I'll give it as a, our company is Lahari. The previous batch, this one, Narni. So it's a Lahari company physical year variant. We will give it as an LV. Okay. Now you understood what we mean by calendar year. If any physical year we are following Jan to December, then that is considered as an. If you are following any physical year, for example, US companies will follow their physical year Jan to December, then that is nothing but their calendar year itself is a fiscal year. Understood? So our Indian fiscal year, is it calendar year or non-calendar year? Kindly respond, please.
Non-calendar year.
Non-calendar year. European fiscal year.
Non-calendar year.
Australia.
Non-calendar.
That's it. Right? Only almost all US company. And Japan follows in different way. Sorry, not Japan, Nepal. They follow around September 15th to like October 14th. Sorry, October 15th to September 14th. Their fiscal year. So you understood what is the difference between a calendar year and a non-calendar year? If any organization or any company follows their physical year from Jan to December, then that is nothing but a calendar year. If any company is not following Jan to December, their fiscal year, then all those years are considered as a non-calendar years. Clear, everyone?
Yes, ma'am.
Okay, then what we will do is we will stop here itself for today. And next week we will continue with what is dependent fiscal year variant and non-dependent fiscal year variant. So this is very, very important. Again and again, I'm reiterating, most of the questions we are going to get from this global parameters only. Most of the questions. So please go through once whenever you get a time. Then you can understand. If at all any questions, please let me know what are your questions regarding chart of accounts, operational chart of accounts, country specific chart of accounts, group chart of accounts. What do you mean by retained earnings accounts, right? Account groups, okay, they may ask you, but same time, this one, fiscal year variant. Before we wind up, any questions from your end? Yes, no.
No, no.
Yeah. Thank you very much. See you next week session at 2:30. I'll share this recording.
Thanks.
Thank you.